What is up, YouTube? Welcome back to Stocks by the Numbers. And today I wanted to take a look at Goodyear Tire, symbol GT. And in my opinion, I think this is undervalued. They had this thing north of 20, as high as $24 a share about 6 months ago, as you can see here by this chart. And we're trending downwards. Now, first of all, I'm looking at a $3.5 billion market cap. Yes, the beta is high, but we're seeing a PE of only 4. And if we come down here, you see annual revenues. They brought in $17.5 billion last year. So, it's trading at 1/6 of the revenue that they bring in. Now, obviously, not the best way to look at it, because I know people are beating up, a company like this because the cost of raw materials went up, so their profit margins have gone down. But at the end of the day, we're talking about a company that's doing $17-18 billion in business. And right now, you're telling me the company's only worth $3.5 billion. I'm actually very surprised that it took so long for this to start reversing. As you can see, it hit $11 sometime last week, and now we're kind of in that reversal trend, just a touch below 12.5. And in my opinion, we're going to keep going. I think we're going to retrace up to this 14.5 level, and long term, I think we should be even higher. And another thing that made me laugh is, if you come down here, you see some articles come out. They mention some good things. They mention some bad things. But overall, I'm seeing revenues surging 40%. GT recorded highest first quarter revenue in 10 years. And if you look at the segments, America segment is up. Europe and Middle East and Africa is up 16%. Asia Pacific segment increased 15% year over year. So they're basically, in my opinion, just beating this company up because their profits aren't large enough. But it also makes me laugh too, because in the same article, right, they tell you, it was a Zacks article, by the way, but this is a 6-month chart of a BRP. They said that they like it better, and you're seeing here a market cap of $6.2 billion, and if we scroll down, they made $7.6 billion last year. Okay, so somehow you're telling me you like this company better. Yeah, they might have earned a little bit more income off that revenue, but you're also telling me this company with $7.6 billion in revenue is not only worth $6.2 billion, but you think it's a better buy than Goodyear Tire, which means you think it's going to keep going. And now if we switch over here to S&P, Standard Motor Products, this was another company that they said they like better. This is a 6-month chart, and basically looks exactly the same as Goodyear Tire. $880 million market cap with a much higher PE. And if we scroll down here and look at the revenue, $1.3 billion. Okay, so if you like them that much more, then how come the market cap isn't reflecting off the revenue and the income? And then if we switch over here to Dormant Products, this is also a 6-month chart, and it's been pulling back, and now you're starting to see a rebound basically just like Goodyear Tire. And you're looking at $3.2 billion in revenue. And if we come down here, they did $1.3 billion in revenue, right? So that's what makes me laugh sometimes. You have these companies. Again, is the income slightly higher? Yes, perhaps. But at the same time, you have to remember, these larger corporations, that they're spreading out and they're trying to obtain just more and more market share so that they can be the name brand in the sector. And I'm pretty sure everyone knows Goodyear Tire. And at the end of the day, like I said, if we're using our revenue to market cap formula, if you're telling me that these companies are undervalued and they're going to continue, this market cap right now is basically in line with Goodyear Tire. And this company is doing, what did we say? $1.35 billion in revenue. Right? And then we come down to Goodyear Tire. $17.5 billion in revenue. Now again, I understand that earnings are low, operating expenses and cost of raw materials have been going up. Totally understandable. But if it were me long term, I would bank on a rebound here on Goodyear Tire, especially if we're talking long term. Short term, you can see we're kind of making a U-turn here, and you might see a reclaim back up to these 14, 14.5, possibly even 15 level, short term. But long term, 12 to 24 months, with a low PE down here and a market cap not really reflecting the amount of business that this company is bringing in, I mean, to me, it's just not adding up. And I think in the next 12 to 24 months, you could potentially see a double here. I think we could get back to that $20, $24 level and perhaps even higher. They're beating this company up. And again, I understand that the income off the revenue might not be as high as they anticipate. But, they're beating on the EPS side. They're beating on the revenue side. Look at these quarters. I mean, look at this last quarter. They brought in, $5 billion. And their earnings from that is roughly 10%, $500 million. And if we go back to these other companies, you're seeing the same thing. Look, 7.65, they brought in 793, so a little over 10%. You come down here, look, 1.3, they brought in 90. There you go, they're less than 10%. And we come over here to Dorm, 1.3 billion, and they brought in 130 in earnings. So they're all at like that 10% income level. So, I understand that they want to beat up GT over the quarters and over the years for not having that level of income that that they feel is necessary. But at the same time, this company's doing 10, 12, 15 times as much revenue as these other companies that Zach supposedly recommends to us. And for the life of me, I cannot understand why. If I were a betting man, I would, in my opinion, I would bet on Goodyear Tire. I think not only in the short term, but more importantly in the long term, this should have a rebound. And it makes me laugh too, because look, we're at $15.99, right? This is December 2019, going into COVID. We're at 15. They bring it all the way down to below 6. But then look what happens. Oh, all of a sudden everyone and their brother needs to buy a car, right? New car prices are up. Used car prices are up. Used cars, I was looking just a couple of months ago. A used car that used to cost $3,000, $4,000, $5,000, now they're trying to get, $9,000, $10,000, $12,000 for. So anyone who's anyone who's selling or trading these used cars to the public is making a killing right now on these premiums. And look at the way they brought this up. Oh, because everyone needs tires, right? Sales are up. COVID sales are up. Look, they brought it up to 20. Keeps going. 20, 22, $24. But now all of a sudden it's worth half that and it's only worth $12. I'm sorry. Men lie, women lie, numbers do not lie. And at the end of the day, with a company like Goodyear Tire trading down at 12, when it came out right here, this is back February. This is back in February when they posted this earnings and they dropped like a rock. When it hit here, I recall this specifically, at these high 16s, low 17 level here on the way down, I was a buyer. Because in my eyes, I thought it was an overreaction. I mean, look at this. You're bringing in $5 billion for the quarter. For the quarter. And you're telling me the company has a market cap of only $3.5 billion? I'm sorry, it's just not adding up. And then these numbers were posted roughly 2 weeks ago. Look at this, another beat, $4.9 billion over $4.733 billion estimate. I mean, again, rising costs and inflation and wars in Europe, I understand. But at the end of the day, there's only more and more people. And if these, supply chains and everything starts tightening across the board, I mean, a company like Goodyear Tire, yes, they could potentially see a little less income off their revenue. But at the end of the day, they are growing their market share and they are gaining significantly more total revenue than these competitors that were supposedly recommended to us. So, just again, don't be afraid to look at the numbers. Don't be afraid to really dive in and dissect these companies and their earnings and their revenues and their balance sheets. Because in my opinion, all those other companies do not have the type of potential that I'm seeing in Goodyear Tire. So again, short term, we could potentially see a rebound up to this 14 and a half level here. These are the trend lines over the last 6 months. And, personally, I'm just not seeing it. I'm not seeing this downtrend. And again, I do think this is an overreaction. And I think long term, 12 to 24 months, I don't see any reason why that not only can this rebound to 20, but it could potentially go even higher. So this is just my take on it. Again, I'm sure there's a lot of people out there that might agree with me. Might even be more people who disagree with me and feel I have no idea what I'm talking about, and this stock's going to hit new lows down at $9. And, I'd love to hear your perspective on the company. If you guys want to leave it down in the comments section, we could have a little back and forth. I also input my personal Discord channel into the description now. So if you guys want to come in, you just want to chat, you want to BS, or you want to talk about a company like Goodyear, or perhaps a company I'm not talking about, you want me to look at the balance sheet and make a quick video on it, because again, numbers do not lie. Revenue is up. Look at this jump in revenue. 12 billion to 17.5 billion. I mean, you're talking what, like 40 to 45%, and the cost of revenue only went up just about 30%. Gross profit almost doubled. We switch over here to the balance sheet. I mean, look at this. Assets are up. Liabilities made a little jump. Equity up. Capitalization up. I mean, all across the board, I think that this is a healthy company. And if we do our market cap to total revenue equation, in my opinion, it's undervalued. Sitting here with a PE of a little over 4, I mean, again, that's a little undervalued in my opinion. We switch over here. Again, this was recommended in the article, PE of 11, and all these companies, look, PE of 10. All these companies, in my opinion, are more overvalued right now compared to the business of Goodyear Tire. So don't just blindly go into these articles. Again, I just want to remind people, don't be afraid to take some time and really look into the company and look at the numbers and see what's going on. And now again, I'm an honest, straight up man. I might have missed something, and someone might leave a comment that makes me feel like a fool, and they feel the stock might pull back to $9. And I welcome those views. But, looking at it the way I do, not to toot my own horn, but most of the time I end up right. If we go back to DraftKings, I made a recap video again. That stock is on its way back up to $14. And I believe it was down at around 10 when I first initially made the video, and said that this was an overreaction and we should see a rebound back up to the $13, $13.5, $14 level. And that's exactly what happened. I think it only took a week and a half. So again, it's all about pricing and timing. And when I look at a company like Goodyear Tire, here at $12 a share, again, can it pull back? Can it keep selling off and going lower? Of course, anything can happen. But on the flip side, long term, I think not only is this a brand name decent company to own, but at this price, I find it very attractive. Again, that's just my opinion. So if you guys have any questions, comments, or concerns, leave it in the comments section again. And if you guys just want to chat with me and have a little back and forth, regardless of anything you want to talk about, I have my personal Discord in the description. And all around, like I always say, I really wish everyone well, everyone who's watching this video, everyone who's involved in the market. I wish you all success moving forward. I hope everyone makes a couple of dollars. And if you like the video, give it a thumbs up. Subscribe to the channel if you like what I have to say and you want to see more videos. And again, thanks for stopping by. I hope you guys have a great day.